So, I once again welcome all of you to this enriching session on investment banking. So, please make the best of the session. Okay, understand the concepts, ask as many queries as you can, right? And our speaker for today's session is also here with us. I would like to introduce you to our speaker, Gaurav Arora. So, over to you, Gaurav.
Sure, Ashmeet. Thank you so much, Ashmeet. And very warm welcome to all of you. Very good evening. Hope you all are doing good. I take up this opportunity to introduce myself first. I'm working as an associate director with Grant Thornton. I hold around 16 years of experience, and I worked with companies like KPMG, Tata Steels, Moody's Analytics, eValueServe, Accenture, and holds around 16 of experience with an investment banking experience. So I worked with investment banking clients, which includes Credit Suisse, Morgan Stanley, JP Morgan, ML, Merrill Lynch, and a couple of more. So those were our clients whom we used to work with on the hardcore research. This topic in itself is very exciting. As a CFA and specializing in finance and MBA, and also a data scientist, I feel that yes, finance is very vast, friends, and it is important to choose a right path or a right career in finance. We have a number of options in finance, but yes, with proper guidance, and also it should give us an employment opportunities in future, as well as helps us enhance our skill sets. So with that note, let's begin with the session and let's understand this whole journey together. We would like to take ahead as a journey, as a right journey for us, as a right career path for us. So CA blend with right skill sets, ACCA blend with another right skill sets helps us, helps us, to go ahead with a couple of things. Right. So I understand that I also completed my CA Inter. I am a CFA, MBA in finance, data scientist, FMVA, which is financial modeling and valuation certified, and couple of more. So investment banking is very vast, friends. And when I joined an organization which was Moody's Analytics that time, even today also. At that time, it was Copal Partners. Copal acquired Amba Research, then got acquired by Moody's. So I worked with Moody's for 3.5 years almost in core investment banking hardcore research, where I used to report to the clients, directly interacting, understanding the whole idea behind that, why this valuation is happening, why it is not only number crunching or number punching in the financial models. So there I learned that yes, of course, investment bankers are highly demanding. Ad hoc projects comes up front, and you have to deliver the same thing with highest quality, full accuracy to the client, and that too within a minimum span of time. And again, that complete research part gets divided into two important aspects. Feel free to write few points for yourself. So if you are ready with pen paper, that's okay. So the complete research aspect gets divided into two parts. One is qualitative research and one is quantitative research. So thank you. Someone has also mentioned buy and sell side. I'll also come to that point too. Thank you. So qualitative research, quantitative research, friends, and we always talk about those things too. And we understand that either a candidate would be a right fit in qualitative research. Qualitative means yes, you're doing the industry study, you're talking about the company profiling, in which products and services the company deals in. What is the overall history of the company? What is the share price movement, and couple of more. Then comes the another important aspect, which is again highly demanding, which is the quantitative aspect, the quantitative research, where we must be always ready with understanding of deep understanding of the valuation methodologies. And when I say valuation methodologies, friends, so those includes DCF, I'm sure everyone must be aware of it, but still I will explain. Discounted cash flow model means fundamental valuation followed by the relative valuations and so on. So an investment banker looks forward for a person who is blend of these two. At one point of time, we should choose one line and then take it ahead. Say 2 years, 3 years spent on qualitative, 2 years, 3 years spent on quantitative. Quantitative is highly demanding. It's not only crunching number, it's understanding the financial reports, then putting some numbers and gathering the right data from a right source, creating a model, or if it's already created, then working on the same model with 100% accuracy, adding your own comments and so on. That's a whole journey, and it's one of the part of the investment banking journey. Lot many things happens in consulting areas and so on. So let's have a look at it, friends, that what we are going to cover in this part of the session. Let me share my screen with all of you. Okay. So, friends, what we are going to cover in this particular part, that is, which is the table of content, which is investment banking. What is investment banking per se, as an overview? Role of an investment banker, different valuation methods, purpose of financial modeling do's and don'ts. And though there are related topics to that, which we'll be also discussing in this particular webinar. But yes, let's have a look at it, what we are going to talk about in these things. First things first, may I know from all of you or from any one of you, what you understand by the word as an investment banking? So, friends, I understand that we have a bit understanding of the same concept. That's okay to be. Think about if you would like to, it's a very easy example to understand. If you would like to buy one house, say in your own vicinity, or maybe suppose you are from different location and coming to Gurgaon for your work, for your job or some other reason, and you want to buy a new house, then what is this? Or you want to take it on rent, then what you do? Either you go to some websites or say 99 acres or somewhere. But those are the pictures which are there. What we do generally, what we do generally is to meet one person who is an intermediator, a broker in simple words, who helps us to also get the right house as per our requirement. And this is an open ended. The broker understands, the broker asks few questions from us. So tell me one thing, friends, tell me one answer to this question. If I am looking for a rented house in Gurgaon or specific place, if you being a broker, what questions you are going to ask me? Anyone? Any thoughts? What are the one, two questions which you're going to ask? What is the budget, cost, area, budget, location, family size? Okay. Okay. Sorry. And which vicinity? Very good. Type of house they are looking for. And we have BHK. Okay, not back, BHK. Prime location, great. Could be, DLF per se, golf course, family or bachelor. Okay. Neighborhoods, healthcare, location. We have all these sorted points with us. Wonderful. Very good, everyone. Amenities, if there are. Okay. Thank you. And what else? There could be many more questions also. We have already identified set top 10 questions. Our own budget, the vicinity, tenure, agreement, pets. Okay, Mohammed. Thank you. I understand that, and I love pets, very honestly, friends. I don't have one, but yes, I love. Important thing for us. Now we are zeroing down to our specific requirement. The first question was, if I'm looking for a house or a rented house, that's an open-ended statement where and all other stuff, you all are helping me to finalize the house. And in between that, you will try to reach out to people who could help you, you know, who could help you to to reach out or to get the house put it on rental basis. People who are ready to give their house on rent or 1 BHK, 2 BHK, and others. So, what is the role of the broker here? As we understand, it helps not only to crack deal first. First of all, it helps to meet two different set of people at one place, and those are one person who is the owner, one person who would be the prospective tenant, landlord and a tenant, right? Deal cracks, okay. Deal doesn't crack, that is okay. He would lose what? Nothing. But he would get a commission if the deal gets cracked. Correct? Owner details and many more. I understand that. Thank you. So the role of investment banker. Now think from an investment banker point of view. Put these things. Now I'm a company, guys. I'm in need of say 1,000 crore rupee. I have certain projects to be financed. Now what should I do? My bank limit is already saturated. Next is what for me? And at right price. And why should I take a borrowing from the bank? Is it important to take a borrowing from the bank? If that is okay, okay. If not, then what is the other route? Whom should I consult for this? The right word is whom should I reach for the professional consulting? And basis that I would be able to, not only make a connect, but also being able to understand what the market is actually thinking about. So the broker is a person who is in his or her own niche area, who knows it. Broker is not a person, I would say, who understands the complete Gurgaon market or the Delhi NCR market or everything. No, he is not that one. Investment banker is a person who works in a broader way, who understand not only the market but understand every industry, and that too not locally but globally. So I have some few answers for that. So pitch the idea to the investors, raise private equity, investment bankers should be consulted, TAS advising. So yes, exactly, guys. So friends, as an investment banker, or your job is to reach out to the companies or to the companies or insurance companies or banks who are ready to provide funds, so that the person or the company who has reached out to you is in requirement of funds, so that you can help them match and close the deal. Second is not only this one, but yes, you could help me raise funds through different routes. So let's understand investment banking, an intermediary to assist organizations in raising funds from different M&A related activities, mergers and acquisitions related activities. And this picture in itself explains us something which is important. So it could be related to bonds, it could be related to shares, it could be combination of both to raise the funds together. I'm sure everyone must have heard about a word, namely IPO, initial public offer. For example, if my company is not at all a listed company and I want to go ahead with listing, I want to raise more funds. You could also suggest me, Gaurav, you could also opt for this option, though it is time taking, but yes, your visibility will be there. You will be visible across, right? You would be your price or your shares would have also been visible as a value, the stock exchange where everyone is trading, even if people are not trading, but people know about your company. Latest IPOs, even there are many IPOs which actually came up, and there are many IPOs which are upcoming. Are you with me, friends? So bonds, shares, these are a couple of routes. In this case, I'm doing what? I'm raising funds for to do, and on basis what I'm raising funds, offering something in the market. If I'm offering my shares in the market, and basis that, friends, I'm raising funds, hence I am selling what? Selling my securities so that I raise funds. And if the companies, just like mutual funds or insurance companies, who are buying those particular funds, those are who are ready to invest in my company, ready to give me funds for, and they're buying those securities, those are known as the from the buy side. I am from the sell side. Investment banking works on the sell side, so that it provides a right platform to every company, and understand that yes, how this would be a right deal for the company who is trying to raise the funds, followed by yes, it is selling some securities in the market and hence the deal is getting closed. It doesn't get closed with one also. It could be possible it get closed with different. So let's understand with the help of this example. This is already a right picture to talk about. Corporates gets funds from these and they give the bonds and shares to them. Hence investment banking is something who brings a contract between the two parties where they are doing a research from the sell side point of view. So there are two key takeaways, friends. Please help yourself. You may write it down for your reference. Yeah. So I would say that yes, uh, you know, write down one is the buy side, one is the sell side. Every security has its own pros and cons. Bonds comes with disadvantage that it is going to increase a fixed liability. That's why a company try to go ahead with shares. IPO comes with another challenge. I won't say disadvantage, a challenge that it takes 2 to 6 months to close an IPO, and it's not guaranteed that it would get closed. Hence, investment banker provides another solution and one more solution. That's why they deep dive into it. That's why they go ahead with that. And there are companies, there are organizations who are rightly working on those particular parameters, not only nationally, but internationally. So they understand the pulse of the stock exchanges or the economy, as well as they understand the holistic view of that particular sector, how the sector is booming, and so on. That's why investment banking, in an investment banking also, after choosing the research area, which is either quantitative or qualitative, we also choose a specific sector to work on. So, so just like you should not be working on all the industries. Yes, you should be the master of one. You should be known for that thing, right? So let's understand the same thing in detail in the upcoming part. So there are a lot many things to talk about on buy side, sell side, but broadly, friends, broadly, these are the terminologies. And this is something which is important to understand in the part of the expertise which the investment banker provides. So I'll just share few things with you in the next slide. That what is investment banking? It is a bank that this is a same thing. It is a bank that provides services to large organizations or to organizations to mediocre also. An investment bank is a financial institute that helps individuals, companies, government raises capital by underwriting or issuing securities. It also assists with mergers, acquisitions, and other financial transactions. And investment bank typically deals with large scales, high level financial operations rather than traditional banking services like saving account or loan. I'm sure we should not get confused with the investment banking with respect to the commercial banking. In one word, the bank account you have with your respective bank, they offer commercial banking related services. Like I have my own account with HDFC, salary account with HDFC. So that is not an investment bank. So I can directly reach to a bank and talk about that I'm in requirement of this particular funding. Hence, they could also help me do that. Second is, even if I'm in requirement of the same specific funding, I could also reach out to other places. But this is something a difference between commercial bank and an investment bank. Generally, corporates explore investment bankers. Are you with me, friends? Individuals explore investment bankers for their own personal portfolio management. I repeat this word. This is personal portfolio management. Okay. So can you all, even even you become a CFA or even you are a CA today, can you all work as an individual capacity, either a freelancer or a full time as an investment banker? Okay. So the straight answer to the same is no. In India or across, first of all, across globe, let me talk about across globe. If you are rightly qualified, and rightly qualification is CFA, you have to register yourself as an investment banker as per the country's law. US government allows CFA as an individual with having 5 plus relevant years of experience into core finance research to get themselves registered as a investment banker. Is it allowed in India? Answer is no. Because in India, the word investment banking does not exist. Though it is a buzzword, but yes, it does not exist. What exists in India? In India, friends, what exists is the merchant banking. Help yourself write this down for your ref. Merchant banking, friends, is the right word, which helps us to see what are the requirements to get registered as a merchant bank. And can an individual register? Again, answer is no. So SEBI guideline says individual cannot register. Yes, someone rightly mentioned team can be registered or a company can be registered where the team is working, and that team must have an on an average experience of 10 plus years in providing investment banking or merchant banking or research related services, which is finance research specifically. Those are the rules and regulations which are already there. Yes, can you work with investment banker or investment banking company? 100% yes. As a CA also, CFA also, investment or CFA level 1 also, even in a specialization in investment banking would definitely work. So these are the core areas, friends, which clients actually ask. So I share one example with you. When I was working with Moody's Analytics, even with eValueServe, I you know I was happy to see, rather than surprised, happy to see that the qualifications for an analyst, senior analyst, or a consultant per se is not only MBA, it is slash CFA level 1, slash specializing in investment banking, slash CA. Because CA is core, and I respect that thing because we work very closely with all the chartered accountants. So, excuse me. So, CAs are something who are very good in taxation, auditing, accounting, consulting in all three also. We are GT, so we understand that. So, they want people who are high but on those particular skills, even financial modeling also. But yes, this is again core area, deep dive into finance. So where CA works finishes, CFA work starts, or an analysis work starts, and that to deep dive into it. Projections, financial modeling, and many more, which are part of it, friends. Yeah. So this is something which needs to be taken into consideration. Yeah. Haven't experience in finance. Can I go IB without an MBA or CFA? Yeah. Exactly. I have already answered that. Thank you. So everyone, help me with one investment banking company name which you know. I would request don't do Google. Okay. Which you know, which strikes you first. Put it in the chat right now. Let's explore it. JP, Jeffrey, great. Goldman Sachs, GS, Deutsche Bank, MS, Morgan Stanley. Can a CA fresher become an investment banker? Okay, so not an investment banker, but yes, we can directly work with investment banks. As I shared with you, friends, I directly worked with investment bankers, including Credit Suisse, including Citi, including HSBC, and there was one more, Merrill Lynch. So, which got merged as a BOFA Merrill Lynch, which is Bank of America Merrill Lynch. The moment that 2008 crisis happened, so Bank of America acquired Merrill Lynch, which was an investment bank. Yes, and there could be more. Let's have a look at it, the list of it, guys. Goldman Sachs, JP, Nomura, this is Japanese, Citi, and Deutsche Bank, Morgan Stanley, BNP Paribas, RBS, UBS, HSBC, RBC Markets, and Bank of America Merrill Lynch. And it's a huge list of it. Every bank is working with different expertise and so on. Can you all identify quickly which one is not only an investment bank but also a bank? Everyone. Okay. HSBC, City. Okay. Deutsche Bank. Great. and start pronouncing it as Deutsche Bank. It is comparatively difficult, but yes, it is pronounced like that. UBS, okay? Thank you. And anyone can name, or maybe a couple of you could name, whichever one, just two examples of only investment banks. This is what is there on the screen. Two examples of only investment bank. Right. Goldman Sachs, JP, Nomura. What about MS? What about MS? Morgan Stanley? Don't worry, it is not going to come in your examinations, okay? Relax. But good job. At least we know, at least we know understanding of if Deutsche Bank comes, we could have a bank account with them, or those could be one of our client with for whom or with whom we are actually working with closely because they provide investment banking related services also. So commercial banking, investment banking, separate wings. You cannot open a bank account with Goldman Sachs or someone else. Even neither the companies can do that because it is for the transactions. This is for consulting. Okay. So in this case, Goldman Sachs, my last question was which were the only specific investment bank? Both banks and investment banks? Okay, yeah. So both banks and investment banks are, it's already written in the chat, Citi, HSBC, we have Deutsche Bank, right? And we have a couple of, so like that. Now let's take it forward, friends, right? So tomorrow, day after, you would might be working directly with these banks. Directly means either you could apply with them. Generally, their criteria is different. But yes, with companies like Evaluserve, Moody's Analytics, which is Equity Knowledge Partners today, or other more companies, and not only with those companies, working with companies, for example, which are consulting companies like us, which is GT, we have our own deal advisory wing, which provides those investment banking or merchant banking related services across. But we are not investment bank; we are consulting organizations. We have our own deal advisory. We work with chartered accountants like you, and we provide those services, which is into core into valuation and all. There is a detailed slide on that, dedicated slide on that in the upcoming part. Just hold on your breath for some time and we will be definitely talking about those services which we actually GT as an organization, consulting organization, provides to different clientels into deal advisory and what is part of the deal advisory. Let's take it forward, friends. What are the role of investment banker? Like raising funds, of course, issuance of stock, equity, through equity or bonds, as the case may be, as we know. Core role, that's the heart of investment banking role, which is the mergers and acquisition. So when I was with Tata Steel, I'll just share one more example with you, friends. When I was with Tata Steel, I used to work like I got an opportunity to work with BAG team, which is Business Analysis Group. All, all 500 plus, not 500, today 500, but that time 350, almost I'm talking about 5 years back, 350 chartered accountants work in that dedicated team. We do not call it F&A team, with finance and account, because there are other people who are also working in F&A team. But this is a dedicated team of 350 chartered accountants who work dedicatedly on uh, as a part of the business analysis group. So they analyze the business, and it's a complete group of Tata Group, how to expand the Tata Group, how to meet a specific goal which is there in say 2030. They want to expand, they want to increase the capacity and all. How they are going to do that? Either they are going to build on that. Again, funding is required. What is a long-term projection, long-term part? And second is, if they don't want to build it, they want to acquire another organization. Like Tata Steel acquired Bhushan Steel in 2018 and got completed in 2019. Now Bhushan Steel doesn't exist. Now it is completely merged with the Tata Steel. And now it is known as Tata Steel Bhushan Steel Limited. Completely now merged, hence it is again knowing Tata Steel Limited. Three different plants. We visited all. We conducted a number of enhancement programs, skill-based programs for them too. Another, advisory services, provide strategic advice to all these companies and so on. Yeah. Okay. So yes, Adarsh, so we'll try to make it that we'll share this PPT. You may just again post it at the end of the program. Thank you. Others can also post it in the at the end of the program. Thank you. Then another part is, friends, underwriting. Anyone? What is underwriting? Though it is written here, I'll just share it. What is underwriting means? That taking a whole soul onus of the same deal. Why investment banking came into picture? Sorry. Why these people are so preferred? Not only they're doing research, not only they're doing consulting, advisory, or raising capitals, they're also adding a value in terms of tomorrow, day after, if in an IPO, raising of funds through IPO, things happens in such a way that you know the it is undersubscribed, say less than 80% people have opted for it. How the investment banker is going to deal with that? Either he could give a full consideration commitment that tomorrow, day after, what is left here, I would be happy to purchase it from the market and raise funds for you. In that, they are, of course, they are charging their own commission. So investment bankers gets their own commission, which varies from 2% to 5% of the deal value. I repeat, of the deal value, friends, because they are doing a complete consultancy services. So 1,000 crore, 2%, you just figure it out how much it comes. It's a fee from one transaction. And if they are taking more risk, for example, in terms of full underwriting, complete means every share will be sold out in the market. No under subscription, 100% guarantee. Guarantee means more risk. More risk means more compensation. More compensation means completely better percentage, which could vary between 4 to 5% of again the deal value. So that is also their role to talk about it. Another thing is market making. They talk about the pre-IPO related things. They do the book building process for us. And who are they in this case? Investment bankers. Or we serve some investment bankers and get the same thing done for them. GT's deal advisory also performs the same thing. If you visit our website, you will also see some IPO related thing, pre-IPO and so on. I would highly recommend you visit that website after 8:30. Okay, be on a lighter note. So there are more things to go so that you will be able to have a look at it. So taking responsibility of the deal, correct. Guarantee to buy, perfect. Another thing is risk management. People think about raising funds. People think about other things, making market, IPO, M&A. What's next? If M&A is done, what's next? So can I ask, after buying a car, can I ask another company to take a risk on the same car? They do not take a risk on the car. They take a risk basis how you have driven it. That's where the insurance comes. And insurance means it's a risk cover. Risk covers basis uncertainty. So it would provide you some cover related to financial risk. Hence, the risk identification, prioritization, and mitigation, and further strategies which are long term also being talked about using some hedging strategies. Again, an important topic in a finance, which is known as the derivatives, using derivatives. Derivatives could be related to interest, could be related to equity, swaps, or anything you say. So we have those. So these are the core areas, this thing which helps us. Yeah, sure. So these are the things which actually comes up. Now let's move to the next part. Different valuation techniques. Yeah, I hope this is also good. So when I say different valuation techniques, friends, we come up with a couple of things, different valuation methodologies and so on. And I'm sure a couple of you must be knowing it, but yes, broadly, these are valuing, that is valuing a business. Income approach, intrinsic value. It is popularly covered with discounted cash flow and economic value added. I'm sure majority of you must have studied in your chartered accountancy or studying. EVA is a concept which is again used in India popularly. So I worked with NTPC also for 9 months and so on. Other than this GCF, they used to do the EVAs for their business and for their assets. How much value it is getting added economically in the business. So this is also the part of the same thing. So economic value added is another concept. Investment banking or investment banker focus or prioritize this method in comparison to these two methods first. which is DCF, discounted cash flow. This is dealt in detail in the investment banking programs and so on. How to build the models, what is discounted cash flow. I mean, starting from the scratch, and even also not only the concept building, but also the complete hands-on. Finally, that is building a model and so on. The another part is that is market approach, which is relative value, heart of investment banking, which simply says it is as per the current value of the company, which company must consider. Or at the time of valuing, an investment banker or a specialist must find out its current value as on date. So, if someone asks the value of your house, will you say, okay, in near future, my there'll be a highway which is another 1 kilometer is proposed. It will get built up in next 4 years. Hence, my house value today, as per the next 4 years present value, is coming out to be say 2 crore rupees. Hypothetical, assumption based. How realistic the assumptions again it work. But if I'll say what is the current value, you'll say that yes, currently there are already developments which are already taken place nearby the house. There is another 500 meters, there's a big market, 200 meters, there's a metro station, and there is a important road connected with my house. There are amenities, facilities which are currently available. So we talk about something which is current, visible, as on date today, just like balance sheet concept. Hence, relative valuation works on those concepts, and we match the company's value with the respective company value. So, let's say you guys are chartered accountants, or majority of you are from finance background. Say someone who is from which is masters in computers, or BE, or which is masters in electronics. Both are masters, okay. Even you guys are also a professional or a masters. Are those being comparable with you? The simple answer is no. Are you with me, everyone? What is right comparison? Whom to compare with whom? Can I hear loud from you? Is this easy? Right? The base should be same. And I know this is an obvious answer. So CAs must be compared with chartered accountants or CAs, and MBA finance to be compared with MA finance, and so on. So I understand that fact. We all understand that. Similar. Hence we call it comparable. Public companies, Tata Steel can be compared with Reliance Industries, or Tata Steel can be compared with NTPC. Answer is no. Even though both are listed. Can Tata Steel be compared with another company, say JSW, right? So just like Airtel to be compared with Jio, because they have similar models of the business, or I would say similar business models. Hence, those are rightly compared, immediate competitors. So we call them public companies, public comparables, and we have another wing which is known as the precedent transactions, which is in the past how many companies are already being or how many transactions have already been taken place in the similar industry, so that now if we are entering to buy another company or do an M&A, what is our benchmark, what is our base? Tell me one thing, couple of you mentioned in the beginning of the session, friends. Now here is a connected question. You said, okay, Gaurav, you see these parameters at the time of taking a rental house. These are the 5 7 parameters, 10 parameters related to budget, related to amenities, facilities, and many more things which you all mentioned. Absolutely correct. My budget is there, but there will be a price which I'll be also hearing from the landlord. Okay. I'll say, okay, my budget is say 20,000 for 2 BHK. He will say, next door, Gaurav, my house is fully furnished. I just got it done right now. Right now, I'm currently getting 45. Okay. I understand that it is not matched with the budget. Hypothetical example. But don't you think so? I would be also looking forward for that. What is the overall rent which is going on here? Maybe in last 2 months, 3 months. I wouldn't go last 1 year, because 6 months the scenario generally gets updated. I'll say last 6 months. What was the rental being paid? I might explore broker, or might explore on my own. What is the average rental which is already going on? Is he charging me an over premium for it? Premium is good, but over premium is something which will definitely hit my budget. But why premium? even if there is a premium of 20% in comparison to others. So precedent transactions helps us to understand, friends, that this is the reason why the company has charged a premium, and also what is the premium being charged. So to find out a premium, you should also revisit and find out that what is the overall average on an average in an industry in the last 6 months. The premium got paid, hence you pay it today. Or you should negotiate it to the best possible you can. This is the way how the things takes place. So broadly, four methods in related to income and market approach. Relative valuation is faster, easier, logical, with almost no assumptions. There are one or two which are relevant assumptions. Even in DCF, there are relevant assumptions, but there are good amount of research which we do related to industry research, economy, industry, company. You must have seen, which is top down or bottom up approaches and so on. So this thing, which is discounted cash flow, talks about the business model. Relative valuation talks about how other companies are doing. Hence, I should be rightly priced. This whole research is done by an investment banker, not only one area. So as part of the analyst, consultant, or so, if you work with IBs, or if you would like to come to the role of investment banker, you must be thorough with this, not only the concepts, but also the complete models. How even if one number helps you to achieve a specific other number, would be able to see the sensitivity and scenario analysis and so on. Right? Okay. So if you have any questions, feel free to ask. But yes, I'm open for it. Sure. Are we good? I'm just taking another 5-second pause. If there are any specific questions, feel free to ask. Else, I'm happy to take it to the next slide. Okay. Then we have the whole purpose of financial modeling, as we know. So in this particular part, friends, we'll be talking about upcoming slides, financial model, and a couple of related things to that. Let's have a look at it. Sure. Public company is like an IPO or stake, sir. I didn't get a precedent transaction. Precedent transaction is just like Anisha. I just like uh, since you want to buy an house, say, could you please tell me in which city you are? Let's assume you are in Gurgaon, Delhi. I'm in Gurgaon. So suppose you are in Gurgaon, you want to buy another house. You want to buy one house, not another house, but say one house. The seller is ready to give you a specific price. That is okay. Or the broker is offering you something. What would be your other steps? One of the step would be to find out in last 6 months, Anisha, how many transactions, how many houses got sold in the same vicinity or an area, and at what price. That homework will definitely enhance your confidence, Anisha, to the maximum possible. That yes, I know the pulse of the market, I understand and how it is growing. It is not that the other person is making or trying to take a benefit of something which I do not know. Okay. Yes, I should be rightly informed. Some homework I will do, some information some in market will tell me, and many more. This is the overall purpose of precedent transaction. There is a detailed topic on that, but yes, companies also do it. Tomorrow, day after, if company is trying to buy another company, like I shared an example of Tata Steel buying Bhushan Steel. Don't you think so? They must have already done a detailed homework within an industry in India, that how many transactions took place in last 6 to 8 months, say from 2016 to 17 and so on, and hence they have come up with one pricing, including a premium which they want to offer to Bhushan Steel. This how it works, how it takes place, how it gets calculated. This is a detailed story altogether, and hence it's a financial model per se. Anisha, thank you. Okay. So, friends, financial model again a very interesting area, and it must be, I would say, highly recommended skill set in everyone. So, financial model helps to establish what standardization, consistency, and models are designed to represent what relationship among the variables of the financial problem, so that it can be used to answer what if questions. If tomorrow the scenario changes, what would be the new projected number? So, friends, generally we create a detailed financial models with different scenarios. If I want to buy one company, I have seen or I have projected some revenue streams. Okay, next 5 years. what is the probability that I would be able to reach that revenue stream? I'll share one example with you with the help of an Excel in the upcoming part. And hence, basis that what is the overall highest or lowest numbers? And when we call it a highest or lowest means optimistic, pessimistic. And when we call optimistic, pessimistic, friends, we popularly talk about something which is related to that whether you are doing the best case scenario or worst case scenario. Hence, what if analysis actually comes into picture. Financial models can integrate elements of accounting, finance, economics, corporate psychology, and business philosophy, all. And the forecast is typically based on the company's historical performance and assumptions about it. Yeah, just a sec. Okay, thank you. Sure. So, why prepare financial models? So, don't write this, just understand it. Why prepare? One I'm sharing with all of you is the business plan. Opening a new store. Say, for example, you want to open a new store or your company wants to open it. Don't you think so? They will do some homework, not with pen and paper only, but though they will write down few parameters related pen paper, but they have to come up with a model which would help suffice, which would help them. If tomorrow, what would be the sales forecast? That is, how much footfalls I'm expecting in this particular quarter, followed by the next quarter, followed by the next quarter, and if I come up with these schemes so that it becomes attractive, hence there'll be more footfall, and not only one product, but there'll be many more, so that I would be able to cross sell it. Business plan. I just touched upon only 1% of that business plan. May I know from all of you, what would be the other reasons that why we should prepare a financial model? Over to all of you. Okay. To know about sources of funds, to have overview of budgeting, to know organizations' financial conditions, projection, should capital be raised to make decisions? Okay. ROI trust. Okay. Giving an insight of the company, planning decisions, financial simulations, and so on. Many, many reasons. Many reasons good for you, good for company. Every company, every business, not company, every business must have one detailed financial model, and not only one detailed financial model related to planning, but if for every specific, department per se, sub department per se, or I would say, how to take it forward, financial simulations and so on, which are already there. So let's have a look at it. What other reasons could be? Can you think of something from our previous slides? Can you link something from the previous slide? Raising capital is good. You talked about financial planning. You talked about simulation and a couple of more. Just try to recall something from your previous slides. What could be the most important? I have already talked a live example of it. Valuation. Okay. What is the purpose of valuation? Come up. Debt and equity raising fund. What is the purpose of this? Purpose? Popularly, M&A. Right, friends? Mergers and acquisitions. Strategic planning, fundraising, very good. Company valuation, budgeting, buying and selling, M&A, buying and leasing, sorry. Right? And we have startups feasibility and viability. Wonderful. We have capital allocation. So lot many internal, external things are there to find out transaction price. Very good, Vaibhav. Right, Adarsh, M&A, Anisha, thank you. I would say, even if you have PPT or not, take a snapshot of this. Purpose of a financial model. This helps everyone to know the reason behind why I'm doing it. What I'm doing to definitely. Why I am doing. Just like why you're studying your CA. You know the purpose. What you are going to study, subjects are there. Correct? And you have to choose, or you would be choosing one area specialization among the financial modeling also. Could be related to company valuation, business plan, strategic planning, and so on, and couple of more things. Sure, let's take it forward. Do's and don'ts. Some do's and don'ts for you. Do's: structured approach. Must be simple and transparent. And an important part is there must be something which is known as separate input model and output sheets. In our training sessions, we help not only to create those sheets but also help them link and find out the right values. Flexibility in model, even if I change one number or even if I change the scenario from best case to worst case or from worst case to another base case, it should immediately change. Immediately means just a blink of an eye. I have just selected a scenario and it is working. Friends, for your FYI, no coding, I repeat, no coding is required. 16 years of career, though I know VBA and a couple of more coding languages, not used VBA in the financial model. So that it should not look more complex rather than it should be more user friendly. Its UI must be good and its user experience, which is UX. So both are complementing to each other. UI, user interface, and UX means the user experience. If user is finding it challenging, then what a UI would do in that case? So those things to be kept in mind, and hence leverage built in Excel formulas and built in average formulas. So like there are Excel formulas which is related to, I would say, NPV, IRR. There are some product. There are a couple of more formulas and so on. And model must be accurate. Model must follow the accuracy. There are a couple of more to dos, but yes, uh, do's in this. But yes, always keep these things in mind. Now, now we have another one which is don'ts. Write formulas with embedded constants, use complex formulas, skip error check, and hard code all the numbers. Means everywhere the number is hard coded. What a model would do, it is nothing connected. We are using n number of complex formulas, or maybe there are we are adding more and more formulas in one cell, making it more complex. There are ways to do it. Make it as simple as possible. It means you have a clarity at the time of making it. Right formula with embedded constants and so on. Okay. So yeah, CAGR, CAGR calculation. So that is IRR. Madhu Guri. Okay. Now, types of financial models. There are equity investments related financial models. It means if you want to invest in an equity and so on. If you want to raise funds through equity, we have M&A models. Detailed M&A models also works. So equity is different and M&A is different. M&A is acquiring, finding out accretion, dilutions, and couple of more things. Project finance, yes, we means in companies like any manufacturing company you name out, there is a department namely E&P. So exploration and procurement. So and engineering and procurement specifically. My bad. So they go ahead with financing all those equipments, understanding that how from where we are going to raise it, how much it is going to cost, and then they calculate. So they calculate NPV IRR specifically for those particular projects, not from the company standpoint of view, but not from the project point of view. Company valuation for sure, as I shared with you. And last not least, that is the LBO. The LBO is a different story altogether. When we are buying another company by taking heavy leverage, means heavy debt, so that you have acquired the same company. Now your balance sheet is heavy on debt. That is a simple words, leveraged buyout. Leverage buyout, of course, it's a detailed concept. It's simple that company don't want to issue shares. They want to raise more debt to offer to the selling company since you are a buyer. Hence, you have leveraged more to buy out the other company. This is something which I could tell right now. I'm not touching it in detail right now because that's something could be dealt in near future. But company valuation and many more, these are part and parcel. And you won't believe, friends, and job of an investment banker to find out the value of the company using all the methods. First method is DCF. Second method is, can someone tell me? Just a small test. Anyone been able to recall what was the second method? Yeah, I could see. Okay. Economic value added. The third one was, what was the third one? Under relative valuation, public comparables. Very good. And the last one was, I'm sure someone asked a question. He or she should write first. Precedent transaction, not precision. Vedant, precedent. Thank you. Precedent transaction. Under relative valuation. So Aditya, it was under relative valuation. It was a public company transaction, which is comparable transactions and precedent transactions. Very good. Very good, everyone. So I'm sure that we are able to connect those dots. Basis all these four, we calculate the value of the company. And we create a football field. In sessions, we talk about how to create it. And then we pitch to the client that this is an average price of the company, transaction price or a deal value, and so on. This takes good amount of time. This is core research. It is not finding out one value. You're deep diving into the business model of it. You're helping company also to project something which is available, basis the data and so on. I'll also open that same file. Hope that is something which is downloadable. You are able to see the file and all. And is my screen visible to all of you? So this is just the first leg of the financial model. There are different purposes of financial model which we have already talked about. In every financial model, you may write down at the top of it, there are three important things. One is output sheet, which you are able to see it here. One is input sheet. And the last one is the model sheet, the process sheet or model sheet. We popularly call it from IB standpoint a model sheet. Means where the complete model is taking place. Whole valuation is taking place. From that valuation, it is coming to this particular part, which is the output sheet. So another question to all of you. What should be kept in mind at the time of designing a financial model? Is it an input sheet to be kept in mind, or an output sheet to be kept in mind, or output to be kept in mind? When I say output sheet, means it's not only output sheet, it is the output which what you're looking for. And what are the inputs required? Before I answer this. So, ask, let me just ask one more question to you. The route from one place to another place gets decided basis the destination, or basis the route you decide destination. So you decide the route basis what? Is it that I have started my journey, I'll land up somewhere, or I know where I'm going to land, now I'll decide the route. Think about your own house, you know the target, you know the place where to go. There are different ways to go, correct? But it is not that I am going this side now, so my house is that way. No, guys. Exactly. Destination is important and hence the route is important. That's why, friends, this is the most important thing. So, basis output, think about your inputs. Basis your examination, think about your study plan. It is not basis your studying plan, the examination will take place. No. Are you with me, everyone? Feel, feel comfortable about it. That yes. Even ask question. Gaurav, let me know what is your objective of creating this financial model? What do you want to achieve from this? When you think about those questions, your 50% task is already achieved. Rest is the journey, how you're going to achieve. Asking right prompt, which we call in our AI language, asking right questions, and then zero it down to where you want to land. I want to buy a house, open ended. No. I want to buy a house here, this. Now I'll go ahead with the route. I understand now. Good. So that's why the output sheet is here. Correct. So output sheet is here, friends. Now help yourself, though these are dedicated numbers, as you could see. We call it a dashboard chart, and hence there are a couple of more things at the bottom of it too. It is 22A. A stands for the actual numbers, 24A. Followed by we have the forecasted numbers. We put it as F. There's a way of also, that is the formatting part. So it should be neat and clean. It should be, it should look like that it is progressive. It should meet specific criteria. It should address the specific requirement. And it is not everything which is there on the output sheet. There are few line items which are there on the output sheet, and basis that there is a whole story behind it. So like revenue, which is in blue, which is actual numbers, hard coded numbers, and there are others also. I have removed the formulas because other sheets are not here. Hence these numbers you would be able to see that these are hard coded numbers here. But this is not allowed. It should come from right sheet. Are you with me, friends? This is the whole purpose of it. So we have revenue, we have EBITDA. EBITDA stands for earnings which are before deduction of interest, tax, depreciation, and amortization. These things gets calculated. Friends, these things gets calculated and so on. And what we do is basis the actual number, basis the projected numbers or forecasted numbers, we calculate the EBITDA margin. So there's a net income also, and we have our net income, which are numbers there, which I just put it at zero right now for the projected numbers and so on. We have cash flows and so on. Now you could see at the bottom of it, if you scroll down further, you will see that we have income statement items, and there are three variables. All those these are all the three variables which are there at the top of it. So we have revenue, which are the actual numbers, which is with the bar charts. We have EBITDA margin, we have net income margin. So our template, our output is ready, that what we want to see. So management is interested in looking forward for what would be the revenue stream which I'm going to project, or what is actual and what I'm going to project in terms of actual numbers, absolute numbers. In terms of EBITDA margin and net income margin, we have what? We have percentages. So this chart should talk about both, which is on the left hand side and the right hand side, the axes. So friends, let's do it quickly. This is simple. Let's calculate EBITDA margin. This is a number which is EBITDA divided by this. I'll just increase the zoom size so that it will be easier for all of you. This number, which is EBITDA divided by this revenue, and the moment you press enter, it is already there. The formatting is already there. So hence no need to take care of the formatting right now, but yes, the numbers are getting coded. Copy these numbers and paste it on the right hand side. That's it. Just copy it and paste it on the right hand side. Job done. And once done, you would be able to see that the chart is also getting updated. As we could see, the revenue is growing. As we could see, the revenue is growing, but the margins are falling. So there's a fluctuation in the margin. Hence, it was high in 2025 as a projected number, fallen down and coming down. Though there is a percentage change, so we are showing two charts together. Hence, it's a part of combo chart in an Excel. Our job is not only to create these charts and understand it in the how these charts gets created, but also to make it dynamic. If tomorrow, day after, the number gets changed, I'll not be recreating it. As an analyst, as a consultant, we should be investing time in research, not only just working on the dashboard part of it. Dashboards are generally set outcomes which are being given uh, by the investment bankers or so. So they set their expectations. Sometimes they want dashboard visualization, sometimes they don't want. They have their own things. They say that, okay, share as the complete template, complete work which you have done. I'm sure this is done, everyone. Can I get some confirmation? EBITDA margin? Quickly? Yes? Thumbs up quickly? Yes? Yeah? Thank you. That was easy. Correct? I kept it easy for all of you. Don't worry. Thank you. The next one is, again, calculate for income margin. This to be divided by revenue. Again, it's coming out 21.3. If you just do it, copy it and paste it on the right hand side, you will be able to see that there are numbers which are actually coming up, which are this, and now the chart is also getting updated. Okay. So this way the charts gets updated. I have kept it zero right now, and hence if I try to calculate it with the revenue, that will be not meaningful because the revenue is the net income is not projected correctly right now. Even if try to calculate it like this, it will again give me something which is not meaningful. So it should not be calculated. Though we would be happy to give you numbers, but yes, the whole objective is What is the overall purpose that we wanted to create this? Overall purpose is understand the objective of creating a financial model. What is the whole purpose? What we want to achieve, how we want to achieve this is input and model. Input is something which is your assumption sheet, how many assumptions you are going to put. Not only assumptions, some facts also. That is a share price. Sorry, share price means that is a selling price of a particular product. And if there are different products, say 5 product lines, different price for different, and could be product, could be service, could be long term, could be short term, could be something which you are going to add as an R&D. So there are many more things which actually becomes one of the detailed part of the same financial model. My objective of sharing, or our objective of sharing this particular info, was to help you understand. Always think and brainstorm related to the output which you would like to achieve basis something which the client has shared as a scoping or scope of work with you. Second is basis this output, how you're going to present it. So not only the sheet, the but the visual part of it. There could be 4 more charts which you would be helping yourself to create it, like a cash flow which is already being there. Third is to get this, what is the route which you are going to follow? What are the inputs which are required? And finally, the model. So those things gets detailed in our financial modeling thing, and so on. Thank you. So this is easy. I know that this is easy. This is simple for all of you to go ahead with that. Okay, they are keeping some valuation in mind. The client wants to achieve some deals. So we have reached to the last part of it, and thanks for your patience again. So some key takeaways. Anyone key takeaway? Over to all of you. Please write it down. Maybe one key takeaway basis this part of the session, though we have invested almost 1 hour 15 minutes on this. Thank you. Please write down. Please shoot some things in the chat box. Key takeaway of yours. I would request everyone to do that. One learning which you have actually taken, or maybe something which got brushed up, or something which was important. Name of IB firms. Okay. Thank you. IB is possible. Vedant, with you. Don't worry. The purpose of IB, valuation, purpose of financial modeling. Okay. IB requires strong financial modeling skills. Wonderful. It is one of the important skill. Even the people skill is there. Even the presentation, very good templates, which we call them company profiles, one pager. All models to be made. Okay. Important IB, importance of IB. Okay. Go ahead, everyone. Okay. We have sound knowledge of Excel for dashboard. Yes, sound knowledge of Excel for dashboard. Good sales skills. Okay, thank you. So good negotiation skills. Let's just call it this way. Okay, because you have to negotiate your deal with the client. That what you have researched is something which has a backup for that. Presentation of financial modeling or financial model, data analysis. Very good, guys. Other than M&A, other functions of IB. Wonderful marketing skills required for IB. Great going, guys. Wonderful. Importance of consistency and reliability in model. Great going. So I really appreciate your answers and the way it is going. Let's talk about some key takeaways which we have thought of. Overview of IB for sure, various valuation methods, purpose of financial model do's and don'ts. So these are the few which I wrote for you all, but yes, there are a couple of more which comes up basis the interactions and so on. Thank you. Model should be simple and consistent and so on. Great. So let's move to the almost the last slide of this, which is the GT Deals Consulting. You could also visit a website as I shared with you. That's something which is an open source. So this is deal consulting services. We talk about deal advisory. We talk about due diligence, valuation, IPO services, overseas listing. So it is not only listing in India. You could also go it with overseas and so on. So you will see this. These are the things which are actually going on. IPO services includes pre-IPO services also. So, consulting organizations works on this. So I'm not saying that only investment bankers or companies like Copal Partners or Moody's Analytics or other things or Evaluserve are doing that. They are doing for their respective client. We are doing our for own respective clients, and we are also doing globally. So that's why there are dedicated team, dedicated members who works either of the thing. So if even if you try to go ahead with deal advisory, you have to further choose valuation. Which valuation you want to go ahead with DCF? You want to go ahead with relative valuation, precedent. So under relative valuation, both works. So you have to undergo with both, or you want to go ahead with qualitative research, making important informative presentations. It is not good. Don't get carried away with the presentation which we do in our day-to-day life. or presentation like this. But yes, good presentations means one pager in which one or two pager every information is available to us. Very concise, very precise, and targeted. So yeah, another slide here which is related to queries. If you have, I'm taking a pause, but yes, yeah, UI and UX also correct. Yes. So any queries? We are taking a pause, but I appreciate your participation, guys. Your interaction. If you have any further queries, feel free to ask. We are not over with yet, but there are another one more two slides to talk about something which is different. But yes, feel free to. And if you have any feedback, you could also do. But yes, yeah, there are feedback form also. If you are interested in doing the specialization in investment banking, which are eligible institutions, and what will be the course duration? Yeah. So team would help you, and please share where we can learn financial model. Again, team would help you. So you could also visit our GT learning website. So we have our dedicated program on the same thing. Let me, sir, I have an MBA. This is tier two possible to get entry into a level jobs, entry level job in IB firm. So I would say, guys, I've been honest on that. These investment banking, these direct investment banking companies like Citi, JP Morgan, they first go to IAMs and so on. Okay. Um, and when we talk about consulting companies or other companies, EvaluServe and all, who serve investment banks, right? So if investment bank companies do not do every research directly on their own because that is very costly for them. They're costly resources. They come this side of the table. They said that, okay, why can't we outsource this work to some companies, popularly known as KPOs, knowledge process outsource. You may write down this KPOs or consulting companies from to whom they give the work, they get the work done, highest quality, highly qualified people like us gain experience and share it and add value to ourselves, right? So this is something which happens. And we have, I'll just answer a couple of queries based as this. Our skill-based program, IB, here is something which we are also offering. Please have a look at it. It is 80 duration, 80. I am also part of it. I have designed the same program. And we as a team has designed the same program where if we include introduction to investment banking, we have equity capital markets, debt capital markets, corporate actions, which are so important, complete Excel financial model with valuation techniques and building from the scratch also the DCFs, sensitivity and scenario analysis, which we also cover. And we have our dedicated number of hours to those particular things too. Company profiling, which is a qualitative research part also, which is got covered. Comparable company transactions, which is relative valuation thing, which we also covered. Transaction comparables means precedent transactions. Another important part of investment banking, which is operating and financial benchmarkings. Then we also do a session, dedicated session on behavioral skills, which is presentation, grooming, leadership, and ethics on investment banking area, dedicated session on, and there is a live project. And when I say live project is not only dedicated to the 5 years. We are keep on exploring areas with live case studies and hands-on exercises on preparing a detailed company profile, US apparel industry and metrics, preparing a detailed relative valuation for US listed companies too, preparing a bond pricing model in Excel. There are 13 plus case studies which we do, including Indian case studies and so on. So this is something which we do. There is a dedicated program. So this is 80 hours dedicated program. Weekend happens so that participants would be able to, or people who are working professionals would be able to manage their work and so on. For more details, of course, Ashmeet would be happy to share those particular things and so on. I'll come up to these particular questions in a while. And there are more offerings also on our website, which is LearninGT. We also do certification in financial modeling and valuation. You all wished the program is here. We have certification in blockchain, GST. We have fundamentals on advanced Excel also, Python, Power BI, visualization, which is today's time. I would say that, guys, highly recommended skill after investment banking or financial modeling. Because if you are done now, dynamic financial model, dynamic visualization, we have certificate in Excel too for sure for visualization. There are a couple of more, including SQL, including, as I told you about investment banking is already there. We do finance or non-finance also, but there are a couple of more things. We have certificate in Gen AI too. So there are many things which you would be able to explore, and I recommend that you can explore the website and reach out to the people. And a quick link for everyone, if you can scan, you can visit our website directly and see learning GT, what are our all offerings and so on. And these are the contact people. So I think so Ashmeet would be able to help all of you to reach to the right people. You can take a snap of this also right now, and you can reach out. Okay, I'll again go back to this particular slide also first. You can scan from this also for our direct link of the website. And
Also, there are certain questions in the Q&A section
correct, I'm
from,
coming.
yeah,
Yeah.
yeah.
So this is something which again I request all of you to take a or pen down the number or take a picture of this
Yeah, you can take a screenshot. I'm also mentioning the
Sure.
contact number of the concerned person.
In the
You
chat.
can
Correct.
contact her also as well. Yeah.
Thank you, Ashmeet. Thank you for that heads up. And uh, and then our most beautiful slide of the day, which is thank you all of you.
Yeah.
So I am open for questions, and I'm reaching to this. Of course, we are interested in doing specialization in investment banking, eligible for institutions. I hope, but I'll come to the question. But I hope you all enjoyed the session. But from my side, guys, means I being honest on that. Very interactive. You guys are being very interactive, and this is something which is from my side to all of you. Good round of applause for everyone. Even you can clap for yourself the way you all interacted, guys. Thank you so much. And I'm not leaving right now, but yes, I'm happy to take up the questions which I'm doing right now. When there's a deal advisory in GT, why not call it an IB? Because investment banking, Ajay, investment banking is a separate wing. We cannot get registered as an investment banker. There are things, and a company cannot get registered until they have a same thing. So what is deal advisory? We advise, we closely work with investment banking companies also, or we could also do the same thing, but we cannot overlap the investment bankers. They have their own wing, we have our own area, or our own um, per se, the specific specialization, so that where we could be helping others, organizations. In that case, okay, IB analyst, associate, VP, director. IB, what is the work of IB? Yeah, specifically all areas. It's not about designation. We start with analyst, consultant, associate, followed by the others. Is that all? Okay, like understand? I'm understanding. Okay, not undersubscribe every time, but yes. How can a CA fresher with articleship experience in FDD and go ahead? Okay, so due diligence, which is FDD is due diligence, Vaibhav, if I am able to understand it. So you may write down separately, but yes. Okay. So see, due diligence is something which happens between once the M&A has already happened. So I just share it with you, a live example again. Air India is acquired by which company? Air India is acquired by Tata Group. Correct. When it was acquisition, again, I was part of Tata Steel. So Tata Steel did not acquire, Tata Group acquired. Okay. The moment it got acquired, our existing CHRO, Chief Human Resource Officer, uh, become the vice president there into HR, vice president HR in Air India. And he did a detailed due diligence process. For example, if Air India is saying that yes, tomorrow, day after, we have these number, we have these number of employees and so on, so that there won't be any miss in that. Who is doing this? Even experts are doing this. This is completely due diligence. It is not valuing. See a fresher with articleship experience in FDD can go it. Definitely you can get it. The reason is that don't get carried away with due diligence. Due diligence is one of the part of deal advisory. Explore as a chartered accountant, explore valuation, explore financial model, explore what? Explore deals, how to negotiate, work on those areas also. Are you with me, Weber? Thank you. There is a feedback form, friends, which Ashmeet has already shared. Thank you, really appreciate that. But I'm taking questions. I'm still here. Uh, Please help us with your valuable feedback, okay? So that it is also part of our journey basis this. Okay, so our objective was to give you the best, hence we kept our journey like this. Okay, outcome followed by the input and the process. I'm going to Vishnu, I'm going to do the finalist and so on. And you can also write your feedback in the chat also, guys. So that is also okay. But yes, officially fill the form, but I'm sure you all liked it. But You can also write down something like that. I'm going to be the CA specialist and would like to know further that what free skills available on the internet and that we should skilled with before entering into an articleship. As you mentioned at the end, there's some skills which are available. So that yes, most important skill is Excel and intermediate Excel. I won't say advanced Excel, intermediate Excel, and go ahead with financial modeling. This is something which when we hire CAs, we expect, every organization expects that at least not only as a fresher, but yes, hire good CAs who not only have the experience but rightly skilled. Use your accounting skills in building the same thing. You would be able to understand in a better way. Yes, yes, yes. Thank you, guys. Thank you. We'll get the learning course of courses plus CFA level 1 plus BBA will GT learning courses. So CFA level 1 plus 5 months of finance internship in finance will help me land an entry level role in company like Grant Thornton. Oh, not only Grant Thornton. Try with uh, not only Grant Thornton, but try specific. Sorry. In this case, I recommend companies like Moody's Analytics, Evaluator, where they require CFA level 1 as an as a first preference. So BBA is good, but yes, you are complementing with CFA level 1, means completed CFA level 1. I was able to hire people even in my last organization, Evaluator. I hired one CFA level 1 person who was only a grad, BCom grad. My question was how is works for an analyst different from an associate in investment banking firm? Okay, so definitely the designations are there. Analyst followed by an associate. Associate becomes a bit more experienced person, say 2 to 3 year, and every organization has their own band related to uh, it is 2 to 3 year or 3 to 5 years experience and so on. How they associate works as an associate. Is IB possible without any professional course? We highly recommend that you should have a one professional course, just like CFA level 1 or CA. Completed CA, definitely much preferred. See, every professional course has its own value. That's why we are doing it, Vedant. And we recommend that, yes, if you are going with an IB, okay, good. But if no prior background or not from the finance background, it becomes a bit more challenging because your competitors are from finance background itself. So why your profile should be, yes, complemented with some professional course, could be CFA level 1 or any or specific if you are planning to do. Hence, you will get a better value in the market and so on, right? So gradually things actually comes up, and once cracked means once cracked. Thank you. At least I have answered on all those in this. If there is any other question, feel free to ask. It's always great to hear from you, sir. Okay. Which profile, sir, with which profile to start IB journey as CSCA fresher? Go as an consultant if you get consultant, as an analyst also. IB specifically, but go into valuation, go into either financial modeling, specifically go into valuation because you guys are heavy on valuation, understanding valuations and so on. Complement it. So I again repeat, complement it with Excel skills and good presentation and communication. Excel, if you know, else do one course in an Excel, specifically advanced Excel, or do dedicated course on financial modeling, guys. Why not two? We require people like you. Organizations appreciate highly skilled people, and skill doesn't come with one program. I must say it very clearly with all of you. It comes with regular practice of what you are learning. Okay, friends. Sure. Thank you. Bye bye.